Hello everyone and welcome to this week's Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Hello everybody and welcome to this week's Motor Trade Radio podcast. So you're just still trying to get used to these intros, aren't we, Curtis? And
we are, yes, and
we're just getting used to our other ones. We're just about getting into the perfection point of knowing what we were doing, and we've changed it.
Exactly, yeah. And where are the weeks going, Phil? I mean, this is the last show of January.
Yeah, and I think I think everybody feels that at the minute in the sector, and interestingly, with the snippet to the interview that we've had this week, I think that was the feeling from Derren as well. But we won't spoil that quite as yet. But yeah, the month's flying into it. That we're at the end of January already, and we'll be talking about Valentine's Day next, won't we?
We will indeed. So shout outs this week. Well, you've already mentioned Derren. We'll have an extract from Derren Martin, who is the Director of Valuations at CAP HPI. And it's an interesting one. It really is, because it is obviously looking at January's used car values. But the extract that we'll have, he'll be talking specifically about EVs, because there's been a lot of activity in terms of EV values, not just this month, but it sort of follows on the back of the last 3 or 4 months now.
Yeah, it's kept them. They've kept them busy over the last couple of weeks following the Tesla announcement and what's been happening already in the EV sector. So yeah, we'll play, as Curtis said, we'll play you that snippet part way through. Talking about interviews though, and you know that was shared yesterday. So that's that interview. The full interview is available on your podcast feed, but also available on your podcast feed. And from earlier in the month is the interview with Robert Forrester on Virtue's complicated acquisition of Helston Garages, and also the industry guru Steve Young on from ICDP on Tesla, which I've had some personal feedbacks on that, saying how fascinating and insightful that interview was with Steve, which gave a little bit more context around Tesla and what they do and why they've done what they've done a little bit. So that was much needed at the time in the sector.
Yeah, most definitely. And shout out to Ben, because they've got some limited places available for the London Marathon, which is on the 23rd of April. And that's really open to anyone in the automotive sector. So if you are interested in getting a place, and I know from experience how difficult it is to get a place on the London Marathon, but you can contact Ben direct at ben.org.uk. And to take part, participants need to raise £2,000 for Ben and pay a £60 application fee. But that's such a good way to raise money and get a place, a guaranteed place.
You're not fancying a second time with that one, Curtis, after the last one?
I'm still resting. I did it 5 years ago.
Still getting over that block.
Yeah. I'm running shorter distances now, but anyone who's vaguely thinking about running the London Marathon, if you're listening this morning, this is an unmissable opportunity to get involved.
You still got memories of the brick wall that you hit towards the end, that barrier that you have to get through.
Towards the end, it was halfway through.
Oh, is it?
Yeah. Crossing at Tower Bridge and turning right rather than left.
All right, okay. That's it was getting your mental. Yeah. And also at the minute, going on as we're recording this week's show, and you'll start to see some of the snippets start to come out, is the NADA 2023 is underway over in Dallas there, and it's been running between the 26th and 29th of January there, so Thursday to the Sunday. A lot of people in the industry, particularly from the UK, will be flying over and sharing some thoughts and insight on what they're doing over there. But Dallas now, that's since 1995 since it's been at Dallas, so I imagine that's a big event for not just people from the UK, but all around the globe that'll be heading there to NADA.
Yeah, having been to a few NADAs in my time, it's interesting that they're back in Dallas because that did drop off the circuit. And as you say, the last one was 1995. So for a lot of UK delegates heading out there, this will be their first Dallas trip. So, wishing them all well. And it's already started on social media as early as Wednesday last week. There were people gathering at airports in, I'd say restaurants, but they did look like bars. And
Yes,
having a quick half before getting on the plane.
Seeing a few snippet and pictures of the journeys over the airports they're leaving and the flight journeys and things like that, aren't we already? So we expect to see a lot more from that. And the final shout out, and this is involving one of the friends of the show, Dale Wire. And this is the UK Customer Satisfaction Index, the UK CSI. And this is an automotive sector report that has been shared on Car Dealer magazine. And this is Suzuki tops the annual rankings again and improves on last year's score. So that's a fantastic result there for Suzuki and Dale and his team at Suzuki there.
It really is. Dale was on LinkedIn during the week, and he actually published the top 27. There's 27 brands, and Suzuki not only number one again, but they actually improved their score from last year. So congratulations to Suzuki. Probably worth saying who the top five are. So. Number 5, Mercedes-Benz. Number 4, Audi. Number 3, Hyundai. Number 2, Kia. And number 1, Suzuki. So congratulations to all those brands. And definitely worth looking at the car dealer coverage of that particular story because they do go into some detail.
They do, yeah. Can you imagine what it's like over Kia and Hyundai there as they switch places this year?
Yes, yeah.
From third to second there.
Yeah,
so Kia just nudges above there.
Because they're not competitive at all, those two brands.
So Kia last year 81.7 against Hyundai's 81.8. So 0.1 difference to Hyundai last year, and this year it's 82.3 to Kia and 82.2 to Hyundai. So down 1 point against Kia for Hyundai this year. So a little bit of a switch around there in the second and third position there.
Now, before we get into this week's stories, we'll have that extract from the interview that we did with CAP HPI's Derren Martin. And as I mentioned earlier, he's talking specifically in this extract about the EV trends impacting used car values for franchised and independent dealers in January. And moving on to EVs, it was another challenging month for EV values. Once again, with them falling month on month. How much of an impact do you think Tesla's global price cuts had on that?
It's actually quite difficult to say what the impact of that was because values have already been dropping. We've been talking about this probably since October with values coming down. There's more stock in the market. There's been a little bit of, probably not a little bit, there's a bit of anti-EV feeling from the consumer based on some of the press that's been around over Christmas with long queues to have your car charged. There's you have to take into account the fact that electricity costs have gone up, so it costs more to charge your car. And the main thing really is that EVs are more expensive than petrol and diesel vehicles. And you can compare sort of comparable vehicles and they can be in excess of £10,000 more. So when people are being a little bit more careful with their money, are they prepared to go to EV? And you do have to think about it. If you've got an EV or you're looking to buy an EV, you do have to think about your journey. You can't just jump in a car and think, well, I'll fill up on the way. You have to be prepared to wait at a charge point, and there might be a queue. So if you can charge predominantly at home, it's probably still cost effective. And if you look at the total cost of ownership of the vehicle, it's probably cost effective. But to charge up on the motorway, motorway services can cost in excess of £70, and you might have to queue. So there's a little bit of an anti-EV feeling. The announcement by Tesla on around the 12th, 13th of January probably couldn't come at a worse time for used values because they were already dropping. There's a lot more volume coming back into the market. I mean, since sort of 2017, 2018, we're seeing an 800% increase on the volumes coming back in. It's obviously coming from a low base, but they are only going to increase in volume, those vehicles. And as I say, they're expensive. So the announcement of new car price changes, as it happens very quickly and quite harsh, some of those drops, good for the new car world, good for consumers to find them affordable, but caused a bit of concern, I would imagine, amongst other manufacturers that may find their vehicles not quite so attractively priced against Tesla now. And obviously for used cars, particularly for Model Y, which we had some cars that were already above list. They would now be sitting well above list. There's been some pretty harsh movements down on both our used car values and also on our forecast values, because we have to forecast what cars are going to be worth for the fleet and leasing industry. And we've had to make some adjustments on those based off what's happened in the market to values and what Tesla have done with their new car prices.
And it's something we've talked about on the podcast for the last 3 or 4 months, these Tesla used values coming down. As a result of this price cut, I mean, you have tracked this price decline month on month for certain Tesla models. Would you expect that decline to actually increase over the next couple of months as prices try and find the right value?
Well, some of the Model 3s now look quite attractively priced when you're thinking that they could be sort of sub £30,000 for some. That's a different buyer. So
Yeah.
they may come down more. I think there are different. You can't really sort of brand Tesla altogether with this. I think Model Y is potentially going to come down more, and probably for a few weeks and months yet. Whereas Model 3 may start to stabilise at some point, but that is based on price. And as I say, there is a little bit of a reluctance from the consumer to go electric at the moment. And if they are, maybe on a monthly payment, the new car looks better. But obviously, I guess I don't know if Tesla think about this particularly, but when the new car price comes down, if that can reduce the monthly payment, but if the residual value comes down as well, that has the opposite effect. So there's different sort of factors to take into account with that. But yeah, we have reduced. I think the Model 3 has come down by about a third of its value in the past 4 months in the used market. Model Y, the rear wheel drive dropped by over 14% in 1 month in January. That's nearly £7,000. That part of that is what's going on in the market, and part of that would be the announcement by Tesla. But it is difficult to sort of apportion which bit to which, because they were already coming down this month before that announcement. But it certainly won't have helped. I mean, it's also worth pointing out that it's not just Tesla that have been affected with EVs. We've seen some larger movements than I would ever have imagined in a short period of time on things like the i3, Hyundai Ioniq Electric, Jaguar I-Pace, even sort of Nissan Leaf, also Audi e-tron, Mini Cooper. They've all come down by a few £1,000s this month. And I think there's buying bans from retailers who just don't want to take the risk on them at the moment. So we are in a little bit of a tricky situation with EVs, but they are the future. They're going to be coming back in bigger volumes. And once those values get closer to petrol and diesel car values, they will become attractive to the buyer again.
And you mentioned buying bans. That's specifically for EV models amongst some retailers that you're seeing.
Yeah, definitely. And especially ones that have got a lot of them in stock already, because they paid high prices for them previously. Prices have come down. They don't particularly want to adjust retail values down. So they're in a little bit of a tricky situation where they know that they've got a lot of cars, they need to move, and they don't want any more of that type of vehicle at the moment. It's just too much of a risk at the moment. But it will come back, as I say, once the prices are a lot closer to petrol and diesel. It will come back. And also the winter can have an effect on consumers because you don't get the charge, you don't get the range. So yeah, if you charge it and you're not getting that range to what you might expect, that can put people off. And there's lots of online forums about this sort of stuff. So the summer will no doubt be better for electric vehicles anyway. from that perspective.
Well, some great insight as ever from Derren on what's happening in the used car market, specifically on values. And interesting what he's saying about buying bans in
Yes.
some dealer groups who will not be buying EVs at the moment because
Yeah.
they're holding stock that they want to sell.
Yeah, definitely. There's a lot going on, and you've got to listen to the full interview there with Derren. I'd suggest if you've not heard it already in your podcast feed, do head over to that, as I said at the start of the show. And as I said, there's the editorial available that Derren has shared through his LinkedIn profile for the full editorial. But we say it every time about the devil's in the detail, but I tell you what, this time more than ever, devil is in the detail around that what's happening in that EV sector and how it's impacting the overall movements of the sectors and overall movement at them age points as well. But a lot going on. It's going to take a little bit of time, as we said in the interview towards the end of that interview with Derren, was going to take a little bit of time in the short term for this EV market to stabilise and find their sort of positions in the sector against the combustion engine. And then it should be okay. But it's just how long that readjustment will take. But great interview there with Derren and very much up to date in terms of what's happening in the market.
So headlines this week are from Car Dealer, AM, Sky News, BBC News, The Guardian and The Telegraph. So we'll start in a minute with this week's big acquisition story, and it's is US dealer group Lithia poised to buy Jardine Motors? And also, are UK groups undervalued for overseas buyers? So we've got a linked lead into this week's headlines with those two stories. We'll also look at how an Australian battery company is signalling plans to bid for the failed Britishvolt gigafactory business. We also have an update on Cazoo with CEO Alex Chessman stepping down as the business consults on site closures. Delisted Cambria Automobiles starts its second chapter with a key appointment. There's a double whammy of falling new car sales and lapsed customers hitting workshop throughput. And finally, this week, Dacia's cheeky response to car brands charging subscriptions for heated seats.
I do like that one when we get to the end there, Curtis. You
Yes.
found a little bit of a gem there to finish this week's show off with. But as Curtis said there, we're heading over to the first story. It's like a joint story with this one between sort of Sky News and talking about that Lithia acquisition of the Ferrari dealer Jardine Motors for a value of 300 million. But actually, there's a story in Car Dealer as well that talks a little bit more about the UK market and pricing of the sector in the UK market. So, as I said there, we know Lithia. We talked about Lithia previously, in that they were sort of the ones trying to buy the Pendragon business and being blocked by Heading at the time. And there was this talk that, would they just go away from the UK market? They've had appetite in entering the UK sector, automotive industry, and clearly they have with the acquisition of their the Ferrari dealership Jardine Motors for the price of 300 million there. So interesting one, this one, Curtis.
Yeah, this is an interesting one, isn't it, Phil? It's probably worth just giving a bit of background on both the dealer groups. So Lithia Motors is massive. It's a $13 billion turnover business. It's one of the fastest growing companies in the Fortune 500. And it's the third largest US dealer group after AutoNation and Penske. So to give an idea of the scale of the business, it operates 267 sites in 24 US states and 14 actually in Canada as well. So it is absolutely massive. And as you say, it has been looking at the UK before because it was getting rather close to Pendragon at one stage. Now, Jardine, they're a big expanding, they've been fast expanding over the years. They're Hong Kong owned by Jardine Matheson Holdings. The group is based in Colchester. and represents 14 premium and luxury brands, including BMW, Jaguar Land Rover, Mercedes, Aston Martin, McLaren, and of course Ferrari. And that's across 50 locations. And it's quite interesting looking at their geographical spread, because they've got dealers really stretching from the southeast up to the Midlands, West Midlands, and then up to the northwest. So that's quite a footprint. So you can understand why Lithia would be interested in Jardine.
Yeah, exactly. And I suppose this is a big question as to whether, and whether there's going to be further and United there. Is this the first of many? Is this the opportunity that they may want to look at the entire Jardine business in the UK? There's lots of questions, or is this just a first move into that premium high end sector, and there may be more to come from that. So you just never know with these things, do you? But as you say, when you actually start to think about the scale of both of these businesses, in the global market, you can see where there's obviously clear synergies in there in terms of that acquisition and why Lithia are looking at doing it. But clearly a big shift this week on that one, and intentions that actually there is still appetite in international investment in the UK automotive sector, which goes into a little bit more on that one, doesn't it, with the car dealer story, because Mike Allen, again, friend of the show from Zeus Capital, has sort of made comment on, one, the value of the acquisition, and two, how he sees the pricing and valuation across the sector more broadly.
Yeah, some interesting comments here from Mike Allen at Zeus Capital. So he says that Zeus Capital believes that if the deal does go ahead, it highlights how undervalued listed UK dealer groups currently are. And, the £300 million Lithia Motors offer for Jardine is actually based on its profit before tax of £24.5 million in 2021. But, as Mike points out, this doesn't necessarily represent the true value of the group itself. And it does highlight that in terms of overseas investors, some of the UK groups are looking like incredibly good value at the moment. And the likes of Lookers, Pendragon, and Virtue are all mentioned in this piece.
Yeah, I say it's. Mike's obviously, in terms of some of his output about the sector, has been very clear in terms of how the sector is valued, and we've got a story later on from Cambria, and clearly we had similar conversations when we had Mark Lavery on from Cambria previously on the valuation of the UK automotive sector. But this is going to be very interesting, this, isn't it? One, when if the deal goes finally through and everything gets done, and if there is further appetite from this kind of thing at that price, and where that will lead in terms of valuations of the sector. But we'll obviously try and keep a very close eye on this one.
Yeah, and Mike does actually conclude by saying this deal, if it does go through, could spark further international entrance and sector consolidation. And that does actually raise an interesting point, because the consolidation that we're seeing in the UK at the moment, that there's only a certain number of players that can buy groups of this scale. So will we see more international investors coming into the UK over the coming months and years?
Exactly. So we're heading over to the next story that's been covered across many of the sort of the nationals, and that is on the back of the closure of Britishvolt, which is a shame in many ways, not just for the people involved with that closure, but actually that investment and opportunity that Britishvolt gave. But actually, what is coming out of this, and it's covered in the Financial Times, which is Australian battery company signals plans to bid for Britishvolt. Now, this is quite interesting, because this has sort of been a key story of the week for many reasons, as I say. But this is actually, they're already over in the UK looking at the site from what was said in the story.
Yeah, so the company in question is called Recharge, and as you say, it's an Australian battery company. They're based near Melbourne, and they're building a plant near Melbourne, and this seems to be part of their sort of thinking. If they can get two plants up and running in tandem and benefit from some of the ramping up and economies of scale. But interestingly, the founder of Recharge, David Collard, who is actually meeting up with UK government officials this week, and he's touring the site in Blyth as well. He thinks that if he can put together a successful bid, he can actually leverage rather some of the post-Brexit free trade agreements that was signed between the UK and Australia. And he's quite adamant that he's in with a chance. A lot of it will depend on whether or not he can secure the £100 million funding, which was offered by the UK government to Britishvolt before it collapsed. If it does take over, but we'll have to see how this one plays out. But the Financial Times does actually point out that David Collard and his company Recharge is up against a dozen potential bidders for the site, and it actually names Tata, which of course owns Jaguar Land Rover, and Deal Lab, a London-based financial group, as being interested parties in this.
Yeah, no, I mean, it would be fantastic. I mean, the site is supposed to be something else, one in terms of its location and capacity and infrastructure and everything else. But yeah, it'd be great for one for the UK, whatever gets developed there, if it's connected to battery development and etc. Fun for the area as well in terms of employment, etc. I mean, it'll be fantastic news. I think we do need it, don't we? In the UK, we're up against some strong competition across the European and international markets on battery investment, battery development, especially as we head towards the end of the TCA and Brexit and things like this. So, yeah, let's hope, and we'll try and keep you abreast of that as that sort of development breaks into what is going to happen with that site.
And I guess the key to this, Phil, is the need to have gigafactories in the UK to support the UK car industry, because as we switch to EV only production, batteries need to be sourced locally. And
Most
you know,
definitely, yeah,
yeah,
that's yeah.
and this was the big hope for Britishvolt. So it was sad to see that business collapse last week. But there could be some hope here if either Recharge or one of these other buyers comes on board.
Yeah, you're exactly right. You know, we've got the impact of the rules of origin that impacts the EV. That starts to impact on tariffs potentially for product coming into the UK market. So, we do need to look, really getting into this sort of battery development and manufacturing of batteries in the UK to support that marketplace. But we'll see, and we'll keep an eye on this one. So we're now heading over to talk about another story that broke a little bit earlier in the week and last week, but this is about Cazoo. And the recent announcement in the Daily Telegraph is that Cazoo chief executive steps down after 97% collapse in value. Now, we do obviously talk about Cazoo often in the podcast, but he is obviously very much leading many headlines for various reasons. But yeah, he's stepped down as his senior position. He's taken a more operational role as Alex Chesterman, and he's been replaced at the helm with Paul Whitehead, who I believe is a very good operator, and he'll be taking over his executive chairman position. So is a chief operating officer. I do apologise. He is currently the chief operating officer. Who'll be taking over as the executive chairman position. So this is obviously in response to the shareholdings announcement that they had recently and some of the challenges that the business has been facing.
Yeah, and the Daily Telegraph story is interesting because it does highlight that the Cazoo has lost more than 9/10 of its value since it was listed as recently as 2021 on the New York Stock Exchange. And it's also, as part of this story, it announced that it's cutting its target for car sales in the UK to a more modest 40,000 to 50,000 sales this year, compared to 65,000 last year. And the piece says that it will focus on higher margins and faster sales. And it also highlights how Cazoo has sold some of its European businesses. It's sold its Italian and Spanish businesses, and has largely wound down its French and German operations, and pretty much extinguishing what was, a grand plan to dominate the online European used car sector.
Yeah, and there is a lot going on there, isn't there? So we'll keep a close eye on that one. But more interestingly, what did come out following this was there was a story on the BBC. Online car retailer Cazoo consults with staff over site closures. So there is the news brought that following the announcement that they were going to start to close centres across the UK. And obviously, starting an impact of that is obviously on staff, on employees of the business in terms of their lost jobs as a consequence of this decision to start to close some of their sites to support their online retailing. But you picked up on this one because it was a fairly shrewd reaction from our friend of the podcast, Robert Forrester, and Virtue Motors, who quickly reacted to this announcement and saw an opportunity.
Yeah, because the numbers potentially could be rather large, because the Long Bennington car prep site in Lancashire employs 300 people, and the firm Cazoo has more than 20 customer service centres, including sites in Leeds and Doncaster. So, potentially there could be a lot of staff looking for work. And you're right, Virtue actually took to LinkedIn during the week with a posting from Jess Saunders, who is their recruitment resourcer. And it does actually call out to any Cazoo staff who might be threatened with potential closures of the sites where they're working to get in touch. And there's a link within the story, and Jess goes on to say, we have positions available with immediate start dates across sales, after sales, technicians, service and parts roles, accounts, and much more. So that was a really good positive response to what's happening there.
No, a fantastic initiative and perfect timing, as you'd expect, and obviously on the back of the acquisition of Helston's as well. That the Virtue Group will be looking at obviously their staffing, resource, infrastructure, and everything else. So a great move from those.
You're listening to All the Chatter That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. Next up is our latest Menable moment, looking at mental health and well-being awareness, issues and best practices across the automotive sector with me, Stephen Whitten. Yeah, hi guys, time for another Menable Moments. And what are you proud of? What are you really proud of? That's what I want to ask this week. And get everyone thinking, as you look around your business, look around the team of people that work with you, what is it that makes you really proud? Now, the reason I ask that is because two things happened this week. One is that I'm actually being personally mentored by a very, very well-known industry leader. I will probably do something around mentioning who it is a little bit later on, but this particular individual has reached out to me a few months ago, and he's been mentoring me, and on the back of things that he's been suggesting and we've talked about and the work that we've been doing, I'm starting to see some significant results. Now, because of that, I actually dropped him a line earlier in the week and we had a bit of a catch up, and he came back and said, "You're doing really well and I'm really proud of you." And do you know what? Even as I record this, I'm thinking to myself, wow, that's touching a nerve just saying that, because it really is boosting and it really is so motivating, I can't describe. By comparison, I'm also still getting calls from people saying that the issue in their business, in where they work, is that they don't seem to get any recognition or acceptance or acknowledgement of how well they're doing. And their managers never say anything like, "I'm really proud of you," or "well done," or "you did a great job." And yet those few little words, those few little phrases just go such a long way. Now, I really don't want to sound like I'm preaching to the choir here or being condescending or anything, but in some of the management training and leadership programs we've been running recently, it doesn't matter what level of management that you are, it's evident that everyone needs that level of validation and acceptance and understanding. And even just to say to somebody, "I'm proud of you, you did well, thank you for that was a great job," or whatever phraseology you prefer to use, that just goes so far. It really does. And in the environment that we're in right now, which is a bit tough, the external world and all the factors going on out there is not a pretty place. And people are finding that tricky at times. And I would just implore you really to do more of what you do well. And I know that, the industry is a great place and we do have some fantastic leaders, and you probably say, "I'm proud of you," and all that without even realising you're doing it. So this week's Menable Moments is just a little bit of a plea to just say, be consciously aware of doing that. And certainly when any of my team, although they're mostly associates, do anything for us, I'm always quick to make sure that they know that we appreciate what a good job they've done, and so on. So it doesn't take much, but you know that. But equally, as I said, it doesn't matter what level you are, even if you're the CEO, the owner, it's a one-person business or whatever, you still need to get that validation and that motivation from somewhere. So just maybe take a look in the mirror if that's the case. But certainly, look out for the people around you. Do they need that little bit of validation and that little bit of help every so often? So, as I said, a couple of things this week prompted that. One was getting that note from my mentor to say that he was proud of me, which really did go a long way and actually did choke me up, if I'm honest, because I thought, wow, that's recognition. That's amazing. And the other thing is actually on two occasions this week, a conversation with leaders and managers who really are crying out for someone to just go, "You're doing a great job," and not criticise them for not having sold enough cars or sold enough hours or kept the forecourt tidy or whatever it might be. And then on another occasion, was talking to somebody and was introduced as somebody who does mental health and well-being support for the industry. And the words of this manager were, "Well, you're going to be busy here then." So I haven't read too much into that or explored what that was about, but I will do. And that just is a bit of an indication for me that people are cracking on. They're doing a good job despite everything that's going on, but they just do desperately need a little bit of acknowledgement and a bit of a reach out to say, "Well done, you're doing okay. And I'm proud of you." So that was it really. Sorry, that sounded a bit like a sermon. It wasn't meant to be, but you know how proud of you all that I am. And let's keep the love going. Take it easy and see you next time.
Well, as always from Stephen, gives you food for thought there, and the key there was talking about be proud of your staff, be your people, be proud of and the subject of being telling your teams of how proud you are of your teams as well. So again, great little update there from Steve on mental health and well-being from Menable.
And as ever, if you'd like to get in touch with Steve, you can find Menable online at menable.org, or you can email Stephen at stephen.witten@menable.org, and that's Stephen with a PH. Or you can contact him on LinkedIn. So do get in touch with him, and do say that you heard about him from the Motor Trade Radio podcast.
Definitely. So we're heading over to AM Online now, and again, we must have too many friends of the show, Curtis. So I should stop saying a friend of the show. We should point out the ones that aren't friends of the show because
Yeah.
it's listening on. But we are heading over to an update from Mark Lavery of Cambria Automobile Chairman there. So Cambria Automobiles have entered Chapter 2 after McLaren FD appointment. Now, this is a great story in AM, and I would urge you to head over to AM and read. This is some great work by Tom Sharp there over at AM Online. But they're talking about the appointment of the ex McLaren. Was he the boss? What was his position there?
He was finance director at
wasn't it?
McLaren Automotive, Paul Buddin, and he's been appointed as CFO.
And I mean, from the interview that we had a while ago with Mark, and it was the time after they had delisted, but actually he talked obviously about the growth of Cambria, the direction of travel for Cambria, both with their prestige businesses, the motor part businesses, and obviously how they are diversifying. And he touches on that in this story, doesn't he, Curtis, around what they're going, what the future looks like, and what this next chapter looks like for the business.
Yeah, definitely. So we caught up with Mark. It was probably late last year, wasn't it? Sort of September, October time, and he was talking very much about life after delisting as being the next chapter. Well, this is chapter 2, and I must admit I was a bit worried when I saw this headline, mentioning chapter 2, because my journalistic brain automatically thought chapter 11, which is obviously something totally different. So this is chapter 2, and it's very much what happens next at Cambria, and it's this growth plan. And within the piece, Mark talks about a relaunch of its motor parks supermarket business, as well as also targeting further growth for Sogo and the ramp businesses that Cambria operates, and consolidation around that high luxury part of the market that Cambria operates within.
Yeah, no, and it is again, great moves there, but interestingly, the bit that did jump out in the story, and you and I sort of went straight to the subheader there, was death of the PLC, and he talks, obviously, he says that Lavery is clearly optimistic about the group's future and glad to be free of the scrutiny that came of being a PLC, and that he believes it is possible that the automotive retail PLC model will be consigned to history by 2025. That's a bold statement coming from Mark there, isn't it? I wouldn't expect anything less than Mark, and they talk obviously about the agency model has spooked in, or potentially has spooked investors, and this is talking about the valuation of businesses, isn't it?
It is, yeah, and this does link in with the story that we mentioned at the top of the show with Lithia looking at Jardine Motors, because Mark actually says by 2025, I don't think we will see any PLCs, because, put simply, the investment opportunity that's there isn't seen by the investment community. And this is a point he made when he was on the show, that one of the problems that the business faced when it was listed was that that the value of the business was never actually realized by its share price, and the constant move within the business to focus on shareholder return. And it is interesting that he's now put a date on that as being 2025.
Yeah. So, Mark, I know you'd be listening. So again, I think it's probably time that you're probably due back on at some point. So we'll let you get sort of the next month out of the way, and then we should have a conversation and get a little bit of an update on how it's going now in the new world and what's been happening over recent months since you stepped away from that PLC world. And we're heading back over, because we've not been on for a while, but Motor Trade news. And this is covering some interesting insight coming from, again, a friend of the show, sorry, Curtis, but our friend Neil Adley, who has been on a couple of times. He was back in November talking about some of the insight at Judge Service there. But they are talking now that the fall in new car sales hit workshop throughput. So this is looking at it slightly differently now in terms of some of the impact from new car registrations and the impact that's having on the retail dealer network.
Yeah, and I saw the original data on this because I did work with the guys at Judge Service on this particular release, and it makes some interesting points because what they're seeing is this double whammy of that shortfall of new cars, which is around 2.5 million new cars in that sort of sub 3-year park, which we won't see. I mean, they weren't sold. They won't be going through car workshops, and that has a huge knock-on effect with franchise workshops, specifically franchise workshops, and this is compounded by dealers losing service bookings, and a lot of this is down to existing customers reducing their mileages. We're all driving less mileages than we were sort of pre-pandemic, and maybe that need to service the car is just put to one side. It's put on the back burner. Whereas 3 or 4 years ago, you would automatically book your car in for a service for its annual service, but maybe that need isn't seen so much by car owners anymore. So the research actually found that looking at the servicing intentions of those lapsed after-sales customers, found that only 3% of them had currently booked a service. So nearly a third, so 29%, were aware that they needed a service, but they had not taken any steps to actually arrange one. And a further 8.5% did not know their cars required a service.
Yeah, and I think there's a few things, as you say. I mean, interesting output there, analysis from Judge Services there, and one, over that expenditure in the challenging times, but two, we've had 3 years worth of unseasonality, haven't we, in terms of renewals of servicing, MOT renewals, and routines that consumers would have been in, and the dealers would have been supporting through those changes. And we also had that, if you remember back now, it seems a long time ago, but anyway, we're already getting to the end of January in 2023, Curtis, but the MOT extension that the government initiated through the pandemic and lockdowns, that again changes that cycle, and it might take a while for that to get back, but very interesting findings there from Judge Services.
Yeah, and I guess the message behind the story is for those dealers to get back in touch with those lapsed customers, because they're sitting on your database.
Yeah, exactly. And we're finally at the little gem of the week here, and this is go back to a car dealer who shared this. Now, you like this one, and I quite like it as well, because it's got a nice little twist to it. So the headline is "Bottoms Up: Dacia dealerships to give away hot water bottles in cheeky response to heated seats subscriptions." And I like how they've done some of that. Do you? I think nice little title, that one.
They had fun with that headline. You can tell. Yeah. This is a great little story. I was so pleased when they ran this one, because it's there's been quite a bit of gloom and doom around, not just in the automotive sector, but sort of in the wider world. And this story is just a bit of good fun. So what Dacia have done is they're really having a bit of a poke at some of the car brands who are now charging for customers to actually access some of the features within their cars, like heated seats. So you take out a subscription if you buy a new car and you haven't spec'd the heated seats. You can take out a subscription to activate them, connected online. So what Dacia's response to this has been to make available hot water bottles at selected dealerships and invite customers to come in and pick up their free hot water bottles. And there's plenty of small print around this. They're calling them these hot water bottles heated seat saviors, but they do make the point that you use the hot water bottle to heat up your seat. You don't actually drive with
that was
between your backside and the seat. You remove it first.
They'd probably need to be a bit clear on that, make sure that that's the customer understanding, because you can expect a bit of a liable case on that one, couldn't you? As somebody's driving down the road with a boiling hot water
bottle on top,
sat on them all laid across their lap there. But no, again, I think it's a nice little story, thinking about some of the cost of living and challenges facing in the sector there, which, do you know what, Dacia has played very well, haven't they, in the market over the years in terms of that entry point to that sort of cost of a vehicle ownership there. So cracking little story there from Car Dealer, and I do like that title. They've done really well with that title. Something we'd probably expect from some of the more tabloid media in many ways, Curtis, should we say?
Yes, most definitely.
No, great. I bet, like you said, they had some fun with that one between the guys there at Car Dealer. So that's it for this week. I mean, we've covered a lot. We've got bits in there around EV, with the test story and what's happening in EV from Derren. A little bit of a menable there from Steve Whitten, and look out for more from Steve in the future, and some cracking stories. I mean, there's bearing in mind we're only at the end of January, Curtis, and there's a lot happened already, hasn't there?
Yeah, just in this week alone, and there were quite a few stories that we didn't have time to cover. So depending on how next week pans out, we may revisit some of those. But that really is all for now. So many thanks for joining us for all the chat that matters. Until next time, it's goodbye from me.
And it's goodbye from him.
You've been listening to Motor Trade Radio Podcast, powered by eBay Motors Group. We'll be sharing all the links from this week's headlines on Monday morning. So to make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.